The government's promise of cheaper electricity appears to be an elusive affair as Kenyans continue to incur high power bills. Authorities in the Ministry of Energy and other government bodies have been shifting goalposts on when the reduced power bills will be felt, leaving consumers more confused. And as Dennis Otieno reports, independent power producers say urgent measures need to be implemented to reduce the burden of electricity to consumers.
During last year's Jamhuri Day celebrations, President Uhuru Kenyatta delivered what was considered an early Christmas gift to Kenyans.
I am pleased to announce to the nation that the reduction of the cost of electricity will be implemented in 2 tranches of 15% each, with the first 15% achieved through initial actions focusing on system and commercial losses, and this will be reflected in people's bills in December of this year.
Barely a month later, hopes of reducing the cost of electricity continued to dwindle as Kenyans were treated to conflicting messages. Rather than a decrease in the cost of power, consumers were faced with an increase when the Energy and Petroleum Regulatory Authority (EPRA) published an updated schedule of electricity charges, which showed the fuel cost charge at 4 shillings 63 cents in the next billing cycle, up from 4 shillings 21 cents currently. Independent power producers in the country have often been blamed for selling power at very high prices to Kenya Power. The Electricity Sector Association of Kenya, which seeks to ensure a favorable regulatory environment for electricity investments in the country, says this is not the case.
Independent power producers are in the country to provide a service that the government would otherwise have to provide themselves. So we as independent power producers put in money to develop these plants to provide a public good to the society.
Renegotiation of contracts between Kenya Power and IPPs remains an option on the cards, but the association has issued a disclaimer.
In other countries where this has happened, you find that then you scare foreign investors. When the next power plant needs to be built and it's a foreign investor, they will not be sure that what you negotiate with them will actually run through the 20 years. So there's a risk there in terms of attracting investments into this market.
A weaker shilling, which is currently at 113 shillings against the US dollar, is also eating into the promised lower electricity costs. The Kenya Met Department projects most parts of the country will experience dry conditions this month, a move that may negatively impact hydroelectric power generating dams. Until all these factors are addressed, the President's promise of cheaper power since August 2021 is yet to be effected and felt by consumers. Dennis Otieno, Citizen TV.